Happy Friday from sunny Gloucester. Crack straight into it. Focus for the week in the Frame Funds offices this week has been really looking at market volatility after everything that happened in the bank or in Japan with the Bank of Japan, and also the growth scare coming out of the US due to their unemployment numbers a couple of weeks back. Let's hop straight into the 5 biggest developments for the week. The Australian Wage Price Index rose 0.8% month on month, but it just actually missed expectations of 0.9%. It brings the number to 4.1% year on year. The private sector rose 0.7% and the public sector 0.9%. Just generally reiterates that there's still strength in the Australian labour market. Number 2, US core PPI or producer price index slowed to a month-on-month change of 0.0%, so it's just flat. This is a good thing, a good reading for inflation, showing that the cost of inputs for producers is continuing to reduce or stay at a flat level. This supports the idea that inflation is under control, which is in line with what the Fed has recently communicated to investors. Number 3, on Wednesday, the RBNZ surprised with a rate cut of 0.25%, bringing their official cash rate down to 5.25%, down from 5.5%. The move was in response to them now meeting their targeted range for inflation of between 1 and 3%. Number 4, US consumer prices were flat at 0.2% versus expectations of 0.2%. Again, this data reading, similar to point number 2, reaffirms that the path for interest rates in the US looks to be lower because they are managing to get inflation all under wraps. Number 5, Australian unemployment rate rose to 4.2%. But really a lot of the information was sort of hidden underneath the surface, which was that the participation rate rose to, I believe, an all-time high of 67.1%, which means that obviously more people joining the workforce means that the unemployment rate increases. Now, if we have a look here of the performance of a range of futures markets that we track, you will see that the Nikkei, the Nasdaq were some of the strongest markets within our universe, with the Nikkei and the Nasdaq being up over 5%. Worst performer was being the VIX, which was selling off due to obviously the rebound in a lot of these equity markets with a lot of risk and worries about global growth scares and the Bank of Japan intervention and what they're doing with interest rates sort of coming out of the market. In the bond world, 30 years, you can see there were only up 0.46% for the week. The rest of them were relatively flat. And in the commodity space, there wasn't a huge lot of price action. One thing to note, though, within the coffee futures market, that was down week on week of negative 0.67%. Some really interesting cold weather climate pushing through the areas in Brazil, which may impact some production of coffee. Here we can have a look at the week-on-week change of the Australian share market. We had a very, very aggressive sell-off due to the Bank of Japan and all those growth concerns and scares that I spoke about earlier. But this last week, we've pretty much seen all of that unwind. CBA, Westpac, ANZ, all up in excess of 5%. BHP, Rio, Fortescue were getting sold off aggressively with the iron ore market, and generally across the board there was a huge amount of green. A lot of the tech, Square, WiseTech, car sales, NextDC, real estate, so on and so forth, have all rebounded very, very aggressively after we saw that sell-off, and a lot of that was because the Nasdaq has rebounded so aggressively. Other than that, we are right in the midst of reporting season. Telstra reported and a number of other names have reported so far. It has been relatively mixed with a slight bias to the upside, with companies reporting slightly better than expectations. Other than that, hope everybody has a nice weekend. We're definitely over the cold weather here in Gloucester with I believe 25 degrees expected Tuesday or Wednesday next week. Other than that, have a good weekend.